claims from the Labor Department, and the markets will undoubtedly be paying close attention. Let's get Kevin Divney's take on this. He's Chief Investment Officer at Beacon Crest Capital in Boston. A good Thursday morning, Kevin. What kind of jobless claim number are you anticipating today?
Good morning. I think we're going to see it bouncing around the levels we've seen recently. We're still not at the levels we need to get the economy moving again, but really what is happening is what you mentioned, is that the market is digesting all the macroeconomic data that we're getting and seeing or anticipating how it's going to affect the Fed policy. What the market needs to realize and has begun to digest is the tapering and the slowdown of this program has to happen. And our view is the faster that transition begins, the better it is longer term for equities.
You know, all this job...
Hello and welcome in. My name is Vierra. I'm your host, and I'm going to go through some basic analysis. These are charts that I've published on my trading log, and I'm going to go through some of the finer. Okay, last video I looked at the monthly longer term chart, and I'm going to skip that. Just kind of the same levels on the monthly, pretty much on the weekly too. Just take a quick look at the fib extension on the weekly, and the same support level here at the 38.2, 1690, and of course I'm looking to see resistance come in at major resistance, mind you. There's going to be intraday support and resistances, but this is a weekly chart. I'm going to close that up. And I don't think there's too much to look at. Moving averages are rising. I'm going to just roll right into some daily patterns that I'm looking at. Okay. Going to start with the rising wedge. This is the longer of the term patterns. We moved into a high and tight flag, and this is pretty much what started forming the rising wedge. Found support here, so here's our trend lines for that pattern. We broke above that, and like I always like to point out, that these false breaks, it's not as crazy as it sounds. Actually, the psychology behind it is the market wants to take out stops one direction before the more powerful move takes place. And what's really bullish about this is almost can see this is somewhat of a trading range, or a channel if you want to call it that, that we broke out of too, broke down below, and finding support down here with higher lows gives me sort of a bullish feel to this. So one thing that I'm looking at this week now is we have a smaller symmetrical triangle. This is a head and shoulders, kind of a head and shoulders. It's really doesn't have much of a defined right shoulder, but I'd say it's more of a symmetrical triangle. Now, as price approaches the vertex, okay, or apex, whatever you want to call point of the angle, I think we're going to see, or we could see, a pickup of volume. Now, just like here where it broke out, if it breaks down and starts to move the other way, I'm going to say that it will tend to have the stronger move will take place after the false breakout. Remember, the false breakout, I look at the psychology as the market trying to take the stops before the stronger move takes place. So I'll be looking to see which way this is going to break out, down or up, and go from there. The other patterns I'm looking at is a right angle descending and broadening. This is a descending triangle formation here. I think we're finding this is a pretty much stamping down a flat base right here, and we're finding that looking at the pattern wise anyway, that supply is coming in at the top of the trend line and outpacing demand. And we're getting a tight range where demand starts favoring this lower price. This is okay, coming across as a fair price kind of thing, down at the bottom of that descending triangle trend line. And going back, I have it going upward this way just to signify the symmetrical triangle is putting in higher lows. So let's look at some different patterns. I've got some bullish patterns. Still looking for the flag measurements, but also, like, here's a measured move down. I'm seeing the potential for some bearish moves. Really, I have no conviction on direction at this point. Not at least looking at patterns. I could make a case either way. You know, symmetrical triangle, round top. We got that head and shoulders. Here's an interesting one I was looking at the other day, and I think this was Tuesday, and I'm drawing in, you know, this bearish butterfly, and these are some measurements from, these are Fibonacci measurements, that's how you define it, but and looking at now on the same one on the hourly time frame, it's pretty sloppy. I'm more or less playing around here, but I don't think it's that bad. Let's see. Let's switch gears and get into volume. Okay, I'm going to look at volume. I opened up Thinkorswim, and this is a pretty tight trend line here that we broke down, popped back up into that trading range. Here's that same false break above. We had a good move down, and just hitting this is going to be, I think, a key level where we're having these near term lower or higher lows, and on this longer, you know, if we, this is a good pivot point. These two confluence of lines here, I think, are going to be a key area. Going into the SPY volume, like I was saying here, getting a decrease on let me get myself down out of here. So I'm looking at this low volume climax here. We've got an overall decline in volume. Then we gapped up, picked up volume, but really no bullish conviction on the move. Of course, I always say that the lower volume does favor the bulls, but in this case, the, you know, supply came in at this price, overcoming supply overcoming demand at the top of the trend line, and then here's the important level coming down, and this is a secondary test of supply. We had a good test of supply here, and then this doji was a somewhat of a confirmation, and that's when we moved up, did pretty much the same thing here, buy climax, lower volume. Secondary test of supply, we put in a higher high that was looking great, but then Friday we came in higher than this candle, so I don't think it's too bad really for the bulls. And then I'm also looking at the what appears to be some hidden bullish diversions. We got lower RSI lows here from this shorter term time frame with you know, higher lows here. So some hidden divergence, that's what I'm looking at. And let's squeeze over to the hourly time frame. On the hourly, I am looking at this symmetrical triangle is sort of a bleed through from the daily, and somewhat giving a confirmation to that pattern. In terms of volume, is pretty much reflecting into the close. This is hour, you know, 3 hours into the close, we're increasing on the bearish volume. So I think we may come down a little more. Also, the daily MACD, if I go back here to the daily, is kind of doing this kiss back and forth, and we're seeing some negative divergence in here. So I'm going to guess that the false break is going to be the bearish move, and the ensuing stronger move, I think, will end up being the bullish move. So we'll see about that. Okay, I think that's all I've got. You want to stay tuned. I'm working on my log right now. I should have that getting up and running here pretty soon. So I will leave you with that. I should have Monday off, so I will see you on the boards.
Jawboning about tapering and future rates, and now the ECB and the BOE have borrowed that page from the playbook. But there's been a very interesting market reaction to Mr. Carney's attempt to talk the markets back down from expecting any interest rate increase anytime soon. That seems to be running into skepticism from investors because gilt yields suggest that they're betting faster inflation will force action sooner. What happens if the central bankers start finding out that their talk isn't working to keep the markets in line?
Well, what we're going to see is potentially a disconnect between the equity and the bond market, and even as these rates have accelerated in a dramatic way, we've started to see, fortunately, a little bit of decoupling from the equity market. So there is this, as it's been called, the heroin for equity investors. They want Fed stimulus. However, we're seeing solid earnings growth, expanding profit margins, and when you look at the acceleration in bond yields relative to the behavior of the stock market, there was a panic in the beginning, but now it seems as if we're seeing higher dispersion in equity prices. We're seeing equity prices this year, 2013, pricing much more on fundamentals than on the macro backdrop.
You know, that isn't the